Good afternoon, everyone. Good morning to those of you that may be a little further west than myself. My name is Lisa Mitchell. I'm the President and CEO of the Canadian Council for Public-Private Partnerships. Very excited to have everybody here today, virtual, for our Spring 2023 market update with the Canada Infrastructure Bank, providing details on the CIB's progress and expanded 2023 budget mandate. I'm very excited to hear what they have to say. This actually marks the third spring market update that the CIB has done with the council. My second. Thrilled to have Ehren and Tamara with me today. As many of you know, the CIB was created to invest $35 billion in revenue-generating infrastructure that benefits Canadians and attracts private capital. The CIB is an impact investor focused in 5 key areas: public transit, clean power, green infrastructure, broadband, and trade and transportation, and projects that contribute to sustainable economic growth and climate change action across Canada. They've had some really great recent announcements, just a handful that I can sort of mention. They've reached financial close on an investment towards sustainable retrofit projects with Noventa Energy Partners, concluding financing on its first project from its low carbon fuels, carbon capture, utilization, storage, and hydrogen initiative. This joint venture partnership between Shell, Suncor, Proman, and the Government of Quebec will enable construction of Canada's largest biorefinery, and financial close on a financing agreement with the English River First Nation for a new wastewater treatment facility and critical infrastructure on the nation's Grasswoods Urban Reserve near Saskatoon. Today, Tamara and Ehren will provide a recap of the CIB's past year of new investments and discuss new opportunities for the future. But first, in the spirit of truth and reconciliation, we acknowledge the land we gather on as traditional territory of many Indigenous nations today. Coincidentally, I'm the only one that lives here, but coincidentally, the three of us are broadcasting live from Ottawa and joining many of you who are across the country. It's an absolute pleasure to host both of you today, Tamara and Ehren, for this important update. Just quick introductions for those who don't know the two folks that I have joining me today. In 2021, Tamara was appointed chair of the bank, the Canada Infrastructure Bank, one of Canada's most respected executives. She has a wealth of experience forming partnerships with domestic and global institutional investors on revenue-generating projects and engaging with public sector stakeholders. She is also CEO of Vancouver International Airport, led Canada's largest community credit union through the 2008 financial crisis, and served as BC's Deputy Minister of Finance. Thank you for joining us, Tamara.
Yeah, my pleasure.
Also joining us is Ehren Cory. Ehren joined the bank as CEO in 2020, bringing his strong leadership approach, infrastructure expertise, and track record of delivering results by partnering with the private and public sectors. In his role, he is focused on the CIB's strategic direction, including implementing the $10 billion growth plan to accelerate infrastructure investments in Canada and building the CIB as a results-oriented organization. Prior to joining the CIB, Ehren was the president and CEO of Infrastructure Ontario. Welcome, Ehren.
Thanks, Lisa. Great to talk to you.
So our format for today is a bit of a virtual fireside chat. It's cold enough here in Ottawa that we could probably use a real fire. And then we'll open up the floor to some audience questions. So for those of you that are watching from the comfort of your own home or your office, just a few features on the Crowdcast. There at the bottom of your screen, you'll see 2 features that you may want to use. Some of you have already figured out the chat function. I encourage dialogue amongst the participants. Right next to that is a box where you can ask questions. It's got the question mark in it. I'll be taking and monitoring that throughout the conversation, and we'll be able to ask questions as they pop up. There is an ability to vote for questions. So if somebody has put a question in the question box that you'd like to support, you can vote for that, and it pushes them up the queue, and hopefully then better chance of getting answered. And we really encourage everybody out to ask questions if there are some out there. So with that, let's kind of get started. I'm really curious to hear what you guys have going on. And I guess that's a great place to start. Much has changed at the bank over the past few years. So, how would you characterize progress to date?
Well, thanks, Lisa. And I just a thank you to everyone for joining us today. You can see the little counter of people, and I think it's a wonderful chance for us to, talk about our progress, talk about our direction, where we're headed, And I just am thrilled to have so many folks from across the country joining us. So thank you, and thanks Lisa and the council for putting this on. You know, the CIB, it's funny. People have heard me talk before about the technology hype curve and the life of, you know, when a new technology comes out, everyone gets very excited. And then there's the trough of disappointment. That's what it's called in the technology world, when the initial wave of the technology doesn't quite live up to the hype. And then over time, it actually lives into itself. You know, that's the curve that technologies go through. And I've made the analogy before. That's also when an institution starts, it can often go through a similar curve. It's worth reflecting this. The first employee joined the CIB almost exactly 5 years ago. That is, the organization was created by legislation the summer of 2017, but the first employee started in the spring of 2018. That's 5 years. And in the life of an infrastructure project, that's a blink. And in the life of an organization, that's a pretty short time frame too. And to answer your question, we are really, I think, incredibly proud now of the momentum we've got and of the progress we've made. We're very conscious of how large the infrastructure gap is in our country and how much more work there is to do. We kind of live by the proud but never satisfied mantra. But we are really proud of our progress. And so as folks can see, I think you can click and read it, but if our year just ended March 31st, to answer your question directly about progress, we now sit here 5 years in, having made investment commitments in projects that are worth $27 billion if you look at the projects themselves. That's, by the way, that's almost $10 billion. We're at $9.7 billion of the CIB's money committed to those projects, but they have a total capital value of over $27 billion. That's $27 billion of infrastructure projects that are funded and getting built in this country that would not be otherwise. And so that's what we take as one of our core measures of success. This past year, our investment commitments, our financial closes for this last 12 months were greater than the first 4 years combined. And that's a natural function of the momentum we've got, of the talent we've engaged, and of our engagement with all of you, with the many project owners, provinces, municipalities, Indigenous communities, private sector companies, all with infrastructure projects. And we've now got a really healthy pipeline where we're firing at the rate we were hoping. So that is between $3 and $5 billion of CIB investment. So if you follow the multiplier, the rate we're at right now, that's somewhere in the range of $15 billion of infrastructure projects every year getting off the ground in this country as a result of our investments.
So just to pick up on that, what's changed? So there's been a huge progress over the 5 years since the first employee to now. So has something changed over the last year that's really kind of translated into market understanding, or is it something else?
Well, I think the first thing we have to go back to is that there's a very natural ramp up for an organization like ours, not just as you say, but hiring staff from starting from scratch, but in terms of getting to engage with the market, building a pipeline of projects. The CIB was created to identify projects that are stuck because they have too much risk, stuck because they have too long paybacks, stuck because of some form of uncertainty or cost problem. And so those are not shovel-ready projects. That was never the intent of the CIB. And shovel-worthy, absolutely. Shovel-ready, no. If they're shovel-ready, they didn't need us. What they need us to do is get over some hurdle, some commercial risk, technological risk, long payback or economic risk. And so part one, what's changed is time. What's changed is that we now have had the opportunity to build that pipeline. And I can say to you, last year, as I said, we had $4.5 billion of financial closes. That is the result of work for years beforehand to build that pipeline of project, work with project partners, understand the challenges of their project, bring other sources of capital to the table, and make those projects happen. So number one is time. But I think beyond that, some other things have changed in our approach. I mean, first of all, I think we have a much clearer understanding now of what is getting in the way of projects in our country. What are the kinds of uncertainties that where you have a private sector company ready to invest in an electric vehicle charging infrastructure, but for uncertainty in demand and ramp up of electric vehicles, and that's the critical risk. And so we've gotten much, I would say, smarter about understanding the specific risks in the way of specific projects. So that's, I think, that has led us to be much more sophisticated counterparties to say to somebody, we understand your project and we understand what's in its way and we understand how we can help address it. I also think the market has a much better understanding of how to use us. And I think that's true. And every time we do an investment, building retrofits, just to pick an example, when we do one, that leads to 5 more conversations with other property owners or aggregators who say, wait a second, if you're doing that with Johnson Controls, we could do that too. And so I think market understanding has changed pretty significantly. And then lastly, I think as an organization, we've certainly figured out a better balance, I believe, in the types of projects we focus on, Lisa. Our board, and Tamara can speak to this, but I think the board had a lot of, when I joined, we spent a lot of time talking about how do we be the Canada infrastructure bank, and what does that mean? How do you reach across the country? How do you reach all of the sectors that government has set as priority? And how do you reach across different types of projects, from projects that are transformational for one community or one region or one sector, all the way to projects that are truly transformational for our country? And I think getting that balance right and thinking about it as a portfolio of projects is another thing that's changed for us. And I think that what that's led to is having a much more steady drumbeat of investment activity.
And that's actually a really good segue, Tamara. Perhaps I can turn to you in terms of, now that there is that steady stream of investments in the pipeline that Ehren sort of referred to, what's the board's view on the investment priorities to date, and where would you like to see it go in the future?
Yeah, thank you. Thanks, Lisa. And I echo Ehren's thanks and appreciation for 595, 5 more joined, for being interested in the work we're doing and very keen to hear your questions. Very briefly, though, just building on your previous question, I think in addition to what Ehren said, it's not uncommon, as you heard, for new organizations to take some time to find their feet. And I would note that in the first 3 years of our existence, we did precisely one transaction. It was a really important one at the Montreal airport with the REM project. However, I think the problem with that is that the market thought, well, is that the kinds of things you do? Large infrastructure, transportation type projects? I've got a really interesting agriculture one out on the prairies, or we're really interested in doing something with respect to green building retrofits. And well, we've got a portfolio of infrastructure needs in rural and Indigenous communities that each and every one of them are not going to be big enough to attract significant outside capital, but put together, if somebody would help us put them together in a portfolio, they could really be transformational. And so I think the major change that happened, other than I can say it, he can't, we hired Ehren as CEO in late 2020, and then less significantly, I joined as chair in January of 2021 with a focus on demonstrating the breadth and scope of what the bank could contribute to in infrastructure. So our growth plan really focused on every region of our country, as well as more diverse sectors, I think, than what we were maybe originally talking about. So everything from broadband connectivity, clearly an infrastructure need to support a connected and sustainable diverse economy. For sure, work around energy retrofits and energy transformation, but also electrification, sustainable agriculture, Indigenous and rural communities, and building retrofits altogether. So that portfolio approach really allowed our team to both hire a more diverse base of talent. And so we've really been growing as an organization, but also to give more proof points to the kinds of deals that we could do. And what we found is people said, oh, that's what the bank can do. I've got 4 of those. Who do I talk to? And that's really built the momentum. In terms of what we're looking to next, I think that what makes the bank a little bit unique from other Crown agencies, we do have a piece of legislation that dictates who we are and what we do. And the board of directors, very privileged to serve with such a fantastic group of leaders from industry right across the country. But we don't only do the governance and fiduciary role. We also, in legislation, are the investment committee. And so in that sense, we operate more like a public sector pension fund as an institutional infrastructure investor and, in our case, a lender. So we also, as an investment committee and as the board, we've taken an approach that says, hey, we're really happy with our portfolio now. As you heard, 46 deals, almost $10 billion of infrastructure bank money, leveraging almost $30 billion in full value of those transactions. So we like the direction. And how do we keep that momentum going in terms of the breadth and scope of deals, both in terms of sector and geography, but also get at some of the things that Ehren talked about? You know, where is the need for the next St. Lawrence Seaway in our country? You know, that visionary, transformational infrastructure project that's fundamentally going to change the economic and social course of the nation. The infrastructure bank was created also to be a catalyst for those kinds of initiatives, which are slower, they take more time, they require us to invest far more in the thinking and the collaboration and the structuring up front. But we're very keen to continue our momentum while at the same time not lose sight of the fact that number of deals is great, but impact within those deals is also paramount.
I think it's interesting how you sort of spoke about sort of the breadth of what the bank can do, because you've got 5 priority areas, but when you go digging, there's a lot of different types of assets that can fall into those five buckets, right? Sort of on that thread of the future, we're post-budget, federal budget here. It was tabled a couple of weeks ago, and you know, really a new positioning, I think, for the infrastructure bank, taking on a leading role in electrifying Canada's economy and supporting lower energy bills, and really looking to you guys to invest in major clean electricity and clean growth infrastructure. So, you know, what does that look like? How will you respond to that challenge? I think it also said raising your long-term targets for clean power and green infrastructure to at least 10 billion each. So can you tell me a little bit about how you're absorbing that news and what that might look like in the future?
Sure. Do you want me to start? And Tamara, of course, feel free.
Sure, go ahead. Yeah.
It's interesting, Lisa. Your comment is totally right. You know, the 5 sectors that the CIB is focused on actually haven't changed year by year. They're pretty broad categories, including green infrastructure, which means a pretty wide set of things. But what's been interesting the last 2 budgets in a row has been that government has used the budget, and I think this is exactly how it should work, by the way, between an arm's length crown corporation, but one that is respectful of and takes its lead from public policy goals, because infrastructure is about public priorities. The last 2 budgets, I think the government has done some important things to signal within the same broad sectors, if you will, where are areas that they're particularly keen to have the CIB focus. So last year, in the budget, that was things like small modular reactors as a form of non-emitting clean power. It was electric vehicle charging infrastructure as a way to accelerate green in our country. It was carbon capture and storage as a way to accelerate energy transition and decarbonize our energy sources. And so interestingly, if you followed the thread of those things, we have made investments now. You were giving a list of recent investments, but if you go through that, we have now made our first investment in small modular reactors with OPG. We've made an investment in electric vehicle charging, our first, with more to come, to put thousands of new chargers into the market in the next few years at high-speed chargers that are publicly available. We've made our first investment in a low-carbon fuel, the largest biomethanol facility planned in this country. It's got significant hydrogen production as part of that industrial process to create a green fuel. With our partners, Enerchem and others in Quebec. So we've made a number of those over 12 months. So that's an interesting case study in not new mandate for the CIB, but if you will, clarifying where within the green and clean spaces we're focused, and then us going to pursue those. And I tell you that story only to say now fast forward to the budget of a few weeks ago, and it really doubled down in those 2 areas around clean power and green infrastructure. And as you say, it did 2 things. One is it increased our long-term targets, because government, as you said, we started with an appropriation of $35 billion of money to invest. That's the start. The goal is, of course, then to continue to invest every year $3 to $5 billion of this taxpayers' money to get more projects launched. In doing that, I think it's really important as we build that machine and we build that muscle that we adapt to the needs within green and clean. The government's signal was, we'd like to increase your long-term targets of the first 35 billion to 10 billion in each of those two areas. Clean power transition, so this is generation of non-emitting power, renewables, nuclear, which we've made an investment in, also battery storage. And then it's transmission, really importantly, as we know for our country, we have the beautiful advantage of a lot of clean power. We're 85% clean as a grid. We've got to double to triple our production of clean energy, and we've got to get off that last 15% of fossil fuel. And we start from a great place, but also the last bit's always the hardest bit. So transmission is a really important part of the story in our country. And so increasing our long-term target to those areas, to clean power, both generation and transmission, I think is a natural reflection of where as a country we need to be focused. And I think it's really exciting because we know the scale of the ambition of projects like the Atlantic Loop that connect all of the Atlantic provinces and Quebec into a regional grid that you can take advantage of clean power sources. There are other interregional projects across our country between jurisdictions that are really important. There are massive investments in technologies like battery storage that are going to allow us to have more reliable reliance, that may be redundant, reliable reliance on our renewable resources. So these investments, they're ambitious, they're large scale. And so I think increasing our target allocation to them is just a natural, as I say, a natural reflection of where our infrastructure needs are. And then on the green side, increasing our allocation there to $10 billion, again, I think that just speaks to what we've seen in the last 12 months, which is when we go into hydrogen as the hydrogen value chain, and we go into electric vehicle charging, and we go into carbon capture. These are places where Canada has a chance to be leaders in the world. They're places that require significant upfront investment with significant uncertainty, but over the long term have payback, I think. So again, very natural places that we're really excited, places that we're already engaging with partners across the country on, talking to folks at Electricity Canada and industry associations who understand the challenges. CanRIA, I have been talking to, and we'll talk more about where they see the need. So there's a lot of really smart people that are helping us target ourselves, but we've been having a lot of good discussions already with project proponents in those areas, and we're really excited to do more.
I think it's probably safe to say the bank has had an ambitious mandate from the start. And, Ehren, I think to your point, subsequent budgets, providing focus areas and targets, that's got to come with some challenges as well too. So maybe Tamara, I can ask you, what does the board see as some of the key challenges? We're in a world post-pandemic. It's not easy getting infrastructure out the door, whether it's supply chain or labor or commodity prices, inflation. And so, I'd be curious to sort of get your thoughts on what you think about the organization's role in addressing these types of issues. And we can use the example of the U.S. Inflation Reduction Act and inflationary pressures. Wouldn't mind getting your views on that, given the significant pipeline you guys have going on.
Well, certainly we're very pleased with the progress of the bank, particularly recently. And so we're very keen to ensure that momentum is sustained. But as with every opportunity, there are challenges, as you correctly point out. And if there's one thing that's true about infrastructure, in my experience, is that everybody loves it, but they would have loved it better if you'd done it yesterday. So the pressure that we have to deliver within a highly competitive and constrained environment because of the IRA and the amount, just the sheer volume of dollars that are flowing from that historic piece of legislation in ways that frankly are difficult for our country to match. And so we have to be focused and disciplined on where our unique priorities are and how we can work with the market to support getting those priorities done. And so it's why we are focusing perhaps more than we did in the past on advisory services, on some of those upfront investments to really make sure that we understand the market so we can help the market structure financing both so that we can participate, but so that we can get others as well. In the transactions. We're also focused, of course, on ESG and how we make sure that we measure our results, not just on the financial return, but of course, on the benefits that are created for the country. That is our mandate ultimately. We are that unique blend of private and public. I often joke that I think I was chosen for this role because I speak both official languages of our country, private sector and public sector. And so we need both of those approaches to really ensure that our infrastructure investments are landing in a timely way, in a disciplined way, because we don't have unlimited resources, and the bank is really providing a catalytic role. So we're really focused on, do we have the talent, do we have the focus, and do we have the discipline to ensure that we keep delivering with that portfolio? We're there to support the market, to bring more discipline to bear to get more done. And we're always looking over the horizon for the truly transformational pieces of the portfolio that uniquely a Crown corporation like the Infrastructure Bank could participate in and catalyze.
Going back a bit to we talked about sort of the 5 priority areas and all the different types of asset classes that fall underneath. So far, what have you seen as being the most successful, or maybe flip side of that, the most challenging investment classes? And where do you see the most potential? And I know there's been a lot of chat with especially in green energy, critical minerals. Where do you see potential there?
So I really appreciate the question, Lisa, and it's interesting. Tamara sort of hinted in this in one of her earlier answers. I think what we've found is that the best way to think of us is like a very commercial institutional investor. Okay, think pension fund, maybe think of a private equity firm, how they make investment decisions. We make a lot of loans. And the only thing you have to just do is then picture us having a meeting to review an investment in the exact same way, disciplined way that any of those investors were, except when we get to the part of the conversation about returns, we're talking about the outcomes of the infrastructure. And I can't emphasize this enough. And one of the big, Tamara's, I can say this for Tamara, but one of the major shifts that our board has made and that we as an organization have made is to look at everything through that lens. Like we actually, much like a financial investor would say, this has a 9% return and the following risk profile, and they put that through the filter of risk return. We do the exact same thing, just our numerator is not 9% returns. Our numerator is 300,000 tons of GHG emissions reduced. It's 50,000 homes connected to broadband that weren't. It's 75,000 new riders of transit that couldn't access transit. And we, with the same discipline and rigor, have those conversations. Okay, so to answer your question, Lisa, that's the lens we actually now look at investments through. And when we now have 46 of them, including a whole bunch in, energy retrofits or zero emission bus fleets, or where we've got a portfolio, you can say, this deal is higher return or lower return than the last 3 we did in this sector. Why is that? And as you say, some of that is because of market forces. Inflation means costs have gone up for the project. You're still getting the same GHG benefits, but it's more expensive than yesterday. Or it could be because supply chain challenges have increased. You know what I mean? So there's legitimate reasons why, but there's also different projects have faced different gaps. What we've found, to answer your question, is that in some of our sectors, clean power, green infrastructure, and broadband, those 3 in particular, the ROI we can achieve is really high. By injecting some CIB risk-taking money into a project, we can take a project that wasn't going to happen and get it to happen. And we can say that is 1 million tons of GHG that would have been produced in the base case. And you can model that quite effectively. There's pretty sophisticated modeling around GHG. The place where it's been harder relatively, I think, is on the transit side. And I think that's for 2 reasons. One is the increment, that ROI calculation is sometimes harder. Number two, frankly, we're often competing with or being crowded out by purely public money, i.e. grants and other forms of financing. And if you look at how we build transit in this country, it's mostly been through more grant vehicles. So ironically, because the first project was the REM, and I think some people thought, okay, so the CIB is a transit funder. It'll probably do, a couple dozen REMs and call it a day, and haven't done a lot of REMs. And I think that's a natural reflection of the two things I just said. One, our lens on impact means we screen investments on an ROI basis. Two, in the transit space in particular, that ROI calculation is challenged when there's public forms of money available that can actually do the job just fine. And so that's been our experience. It doesn't mean we're not doing transit projects, but we've done less of them across our portfolio.
I guess I would add one thing to that from the board's point of view. And, again, taking this portfolio approach and focusing on the outcomes. And one of the things we look at is absolutely, are we financing infrastructure that otherwise wouldn't get built? But are we also financing infrastructure that gets built sooner as a result, pardon me, of our involvement? And that axis isn't always an easy one to navigate because it is important that in some cases we do need to accelerate the provision of infrastructure. It has a huge public benefit if we do that. But we also have to make sure that we're not going into places where, frankly, the private sector can finance it if they just kind of put their heads to it a little bit more and put a little bit more at risk. So we're very mindful of that delicate balance between, of course, we want to be present in the market and frankly affect the market, right? By the 35 billion that we've been entrusted to deploy. But we don't want to act as a pure substitute for the market, where the market is actually performing well, if not a little slowly. So that axis, I think sometimes if you take a look at the portfolio of the investments we've made, you might say, well, why did you do these ones? And then you stopped and you sort of went over here and did these other ones. It often has to do with that tension within like any portfolio manager would have, around how to make sure that we're deploying our precious capital for its highest and best use, which is absolutely to get things built that otherwise wouldn't, but also more difficult category to get things built faster, which otherwise would, which of course requires more discretion and judgment.
I mean, it's ironic, right, Lisa, because we're talking about our progress in terms of number of projects invested and the dollars invested, but the truth is the best project for us is one that happens and it needed none of or as little as possible of our money. And the investment conversation, I talked about the ROI calculation. Well, the numerator, of course, the return or the outcome, but the denominator, which is our investment, smaller is better. And so our board's constant question is like, if you can achieve, and this is the whole concept of we're trying to crowd in as much private capital as we can. If you can achieve the same outcome with less money from the CIB or none at the extreme, then that's even better, right? So that's the tension we're constantly trying to manage. How do we put just enough money in? I see in the questions some comments around this line. It's what we're doing on every project is what is the minimum amount that the CIB can put into this project to make the overall economics work. That's the fundamental question we're trying to answer, because then you're getting the outcome for the lowest possible cost to taxpayers. And it's funny, we often get asked, are you crowding out private capital? And what we're doing in every single project is trying to put in just enough of our money at risk in the form of a loan or equity to allow the project to have enough returns, just enough that private sector money would partner with us and the project would move forward. And so our view is that we are crowding in private capital by being there, not crowding it out by being there. And that's what we're trying to do, is crowd it as much as we can.
We've talked a lot about sort of the investment priorities and how you see things going. There's a couple of questions here that kind of focus a little bit more on who your partners are and who you work with. So maybe I can take a minute to take some of the questions from the audience. And municipalities, I guess, is a good place to start. Can you tell us a little bit about your work with municipalities to date, and how you work with them in terms of accountability and transparency when you work with the municipal sector?
Yeah, thanks, Lisa. I really appreciate the question, and it is interesting. We're very, you look across our portfolio, it really is mixed in who our partners are. So we've got a lot of investments with municipalities. We have a number of investments directly with First Nations communities. We have investments with provinces, mostly through things like provincial utilities or transit agencies. And then we have investments directly with the private sector. On the municipality side, the two big things we've been doing with municipalities to date have been around their transportation and transit fleets and moving to electric. So we've had a very large and successful zero emission bus program, which has financed the purchase of, in total, over 5,000 buses. That's both school bus operators and municipalities. On the municipality side itself, we have done projects from coast to coast with transit operators, large and small, working with cities. Most recently, it was Durham region and Calgary in the last quarter. Every quarter, there are a few more municipalities that work with us. It's a great example of how our risk-taking can help a municipality, because what we're doing is we're actually taking payback out of the fuel and maintenance savings that come from the electric fleet. So we're truly helping share with them the risk of battery performance over the life of the buses and that sort of thing. And we're helping to defray the higher upfront cost of those buses because they cost about twice as much as a diesel bus. The savings come over the life. So that's one thing we've been doing with municipalities. The second has been around energy retrofits. Municipalities are large property holders. And so working with municipalities on how to decarbonize their buildings, how to move towards more energy efficiency, district energy systems, that sort of thing has been the other big thing we've been doing with municipalities. And of course, I should say, although I said transit projects have been a more uphill climb for us, but we're also working with a number of larger municipalities on their transit plans. And I think as we move forward in transit, we know that our needs are great, and our ability to fund all of that through the traditional public funding mechanisms will reach its limit. And so looking at other ways to use future revenue streams and development charges and other forms of financing models is something we're doing a lot of. We haven't made many investments in that area, but it's the kind of thing we're definitely in conversation with municipalities about.
There's one question here as well too about sort of financial allocation, and it's very typical in government programs to have certain allocations for certain geographies. It's not unheard of. Does the same thing exist for the bank? And there's a question, how will the proposed $35 billion mandate be equitably allocated across provinces?
Tamara, go ahead.
Yeah, I'm happy to take that question. The short answer to that is no. There isn't. We're not a program in that sense, and it maybe also, if I could, it also feeds into another question that was upvoted quite a bit about the political implications of the bank and how do we navigate those. And we are, of course, a crown corporation, a unique crown corporation, but a crown corporation nonetheless. And so we have one shareholder, and that shareholder is the government of Canada. And so the $35 billion is ultimately taxpayer dollars. And so, of course, the government has and should have accountability for some say generally in how those funds are allocated. And that's where you see our growth plan and some of the things you've seen in the budget that we've already talked about. But then the legislation is very clear. It says that the board of directors, once appointed, must act as an independent investment committee to evaluate the risk and return, including the return in terms of outcome that Ehren talked about, in order to assess each and every investment. And that is 100% delegated to the board through legislation that was passed by the House of Commons that created us. And I think if you take a look at our portfolio, you'll see that we've done We've done transactions with virtually every level of government, of every political stripe across the country. So proof that we really are working in the spirit of collaboration with infrastructure owners, regardless of who ultimately is elected to govern those particular agencies and municipalities and provinces. So we know that being a Crown agency comes with a bit of always a political dimension to it, but I think we're quite well structured actually, and our execution can demonstrate that we are accountable in the way we should because it's public money, but we're independent in the way we should be because of our investment mandate.
Further to that, I guess sort of, if you are working with a lot of public authorities at various levels, provinces, territories, municipalities across country. One of the questions here, talks about sort of the points to the electric buses and RAM as examples, but wonders about the confirming the absence of market interest before you consider financing projects. Can you talk to us a little? It's a bit process oriented, but can you talk to us a little bit about what that looks like?
Of course, yeah, and I think it is process oriented, but it's a very valid question and one we have to, I think, always answer. Step one, from the moment we're involved in a project, Lisa, the question we're asking ourselves, just go back to what I said earlier, is what is the gap? What is the barrier to this project happening absent us? So what's the risk that gets in the way, or the uncertainty, or the long payback? So if there isn't one, then there's not a role for the CIB. I can't actually justify our involvement. So we start every discussion from a place of understanding the project from our partner's perspective and understanding what it is that makes it not viable commercially. And we spend a lot of time on that question, and our board would asks us pretty pointed questions about it. So what is the reason? But why is the CIB needed to make this project happen? Second, we have, it depends on to answer your question, sometimes, because your question was about, do you have to do a market sounding? Sometimes the answer to this is really obvious. So some of the projects we're working on have existed for a decade and have been stuck because they are uneconomical or because they have a risk profile. Many of the projects we're working on have existed for years. And the fact that they're blocked is a pretty clear sign that they can't happen on a market only basis. So, and sometimes that's because, as I say, the private market might do it themselves if only they were protected from the downside risk or had certainty or could earn 12% interest, which, it's kind of like saying I'd be in the NBA if only I was 6'8". It's like it's an if that's not possible. We're on video. I could be 6'8". You wouldn't know that so sometimes it's quite evident. Other times we actually do go out and do market sounding. So we've got lots of examples where, in fact, what we've gone out and done is crowd in some amount of private capital. So I'll give you one example. We worked on a district energy project with a public utility. It's owned by a municipality, and they had a significant expansion program to really grow the size of their district energy and decarbonize a bunch of heating in their municipality, which is great. And they wanted to borrow money from us, and their plan was to use municipal funds and CIB funds to fund the expansion. And we said, this is the kind of project that a significant amount of private capital could also participate in. And we, together with them, held a market sounding, talked to a bunch of debt providers and equity providers, and actually then ended up structuring the project with a significant loan from a bank, plus a loan from us and equity from the municipality, which was very different than the way they were planning on doing it. And so we have a number of those examples where we've actually gone out and helped shape the structure. I mean, part of the CIB's role, it's funny saying this to you, Lisa, since I know in your past life, you sat on the other side of this conversation, but part of the CIB's role is also to be a center of excellence and provide advice to people. So when a municipality comes to us and say, well, we want to do this project and we're going to use municipal tax dollars and a loan from you guys, and we say, isn't there a way that we could also make all of our money go further by also leveraging some private sector dollars? And so that's the role. So there's not a hard and fast answer to the question. There's not a hard and fast rule, thou must conduct a market sounding before every project. it's something we do sometimes. It's also sometimes a bit self-evident by the fact that the project has been stuck for a long time.
We've talked a lot about some of your public sector counterparts, so provinces, territories, municipalities, but there's also Indigenous communities that you guys are doing work with as well too, which I think is really important to highlight as well too. So can you tell us a bit about that? And maybe also, because there's a question here about accessing it. So if we could talk about what you're doing, what it is, and how to get in touch, that would be great.
Yeah, we're really, thank you. And we're really proud of the work we've done in the last 2 years. 2 years ago, we launched what we call our Indigenous Community Infrastructure Investing Fund. And this was the idea, as I said earlier, if you want to be the Canada Infrastructure Bank, you can't be the bank only of billion-dollar projects, and you can't be the bank only of the 10 biggest cities of Canada. If you're going to reach across Canada's infrastructure needs, you've got to have a way of supporting Indigenous, northern, and remote communities and their needs. So when we launched this program, we also hired a dedicated team who have experience in working in Indigenous communities, a number of whom are Indigenous themselves and have seen firsthand the challenges of infrastructure gaps. And we changed quite a bit in our investing criteria. So if you think of the typical CIB investment, it's our average investment size is just over $200 million, which implies the project of 2 to 3 to 4 times that size. On the Indigenous community side, we said we would invest in $5 million increments. And so it's a very different approach to the market. We are up to now nearly $200 million that we've lent to Indigenous communities through that program. Some of that is big. There's a railroad called Chouetten, which is a rail project in northern Quebec and Labrador owned by an Indigenous community. That's a significant investment in expanding their business. Others are wastewater treatment facility in an Indigenous community, $6 million to provide sustainable water supply and wastewater treatment in a community. So it really runs the gamut. And we're up to, I believe, somewhere around 30 communities that we've made investments with. And to access us, it's as simple as a phone call or an email. On our website, there's an email address where you can reach out with project inquiries, or you can find a general inquiry line on our website, and we would be happy to talk about infrastructure projects in Indigenous communities or any others that people have on their minds.
That's great, and we can before we close, we'll make sure everybody has the appropriate email address to get in touch. We've touched on it a little bit already on the critical minerals side, but there is a question here that got quite a few votes, and I think there's an interesting piece to it at the end. In terms of defining infrastructure for critical mineral projects. So that's an interesting aspect of the space. Wondering if you have any thoughts or comments on that.
Sure. And I don't see the question, sorry, but I appreciate it. So the definition of infrastructure, I love that part of the question, because you're right. It's one of the most used and least understood words, isn't it? For us, infrastructure means a few things. It's got some public benefit or public good. And specifically for us to invest in it, it has one of the outcomes that we've been pointed at, around GHG emissions reduction, better connectivity of Canadians through either transit or digital connectivity, economic competitiveness and growth, which is why we invest in trade corridors, is why we invest in agricultural communities, as Tamara mentioned earlier, and benefit for Indigenous communities. So we measure specifically closing infrastructure gap. So there's the definition of infrastructure, and then there's which infrastructure we invest in, and ours meet those criteria. Critical minerals falls under the third of those. So the idea behind critical minerals is it's increasing trade capacity and economic competitiveness, which you can measure. And so that's why that, just like investing in a port or an expansion of other forms of trade, we think of growing the pipeline that allows us to move critical minerals. So we would invest in access, roads, rail. We'd invest in clean air. We'd invest in digital connectivity, water and wastewater, all of what you might think of as the enabling infrastructure. We're not investing in a mine. A mine is a specific asset, and it's not infrastructure, but we would invest in all of the stuff around it, if you will, the enabling infrastructure. And I think what we're seeing on the critical mineral side is, for a number of these projects, the enabling infrastructure investment is actually a significant barrier to unlocking the overall project. You look at where our mineral deposits are, and they're often have significant transportation barriers and real clean power barriers, because the whole reason we're into critical minerals is to support EVs and to support ultimately a clean supply chain. And you look, it's not just about getting the critical minerals, it's about how you get them. And did you get them in sustainable and clean ways? If you think about measuring it from a life cycle perspective, you can't burn a bunch of fuel oil to run a mine, I don't think, to produce a critical mineral to make an EV and then feel totally good about it. So clean power is the other, access, transportation, and clean power are probably the two biggest places we're seeing. And from our conversations so far with a number of project proponents, that enabling infrastructure can, I think, make a significant difference in the viability of these projects in our country.
We are getting close to time, but I do have time for one more. And maybe, Tamara, this might be one that maybe I'll throw your way. I don't want to put you on the spot, though. But what are you hearing from partners about working with the CIB? What's working well? And are there areas that you're looking to work on or do things differently, new things that you're looking to try? Maybe I'll start with you if you don't mind me putting you on the spot.
No, not at all. So we spend quite a bit of time hearing from partners, and the board has been out in the market conducting our board meetings so that we get an opportunity to directly hear from partners, in addition to the very transparent feedback that we get through management team and staff. And I'd say the challenges we have there are and opportunities are three. The first, we hear a lot about the competition that is set up for us by our shareholder. So a lot of, frankly, demystifying work and demystification around that, no, we're not going to grant. We're not a granting agency. And so a lot of the conversations that we have, as you might appreciate, sometimes people will speak to various levels of government. They say, well, go talk to the CIB. And really, it should have been go talk to one of the granting programs or go talk to the Department of Infrastructure. So we do spend quite a bit of time. We get a lot of feedback, like, why don't you just grant us the money? That's the only way that this can work. So a little bit of where do we fit in the family, and really making sure that's clear up front. To another question that was asked, where will we? How early will we participate in a project? I think we've been getting better at having the right blend of being pragmatic around where we can actually do that upfront work while not investing in things that are clearly just an idea and not infrastructure. So some examples of that have been some of the feasibility studies that we have funded. There's been several on the transportation side, the Cascadia corridor in my part of the world, potentially linking by high-speed rail Seattle to Vancouver is an example of where we've been doing some work before there's even really a project. And then the third is around how we ensure that we've got the right blend of financing tools in the toolkit, and how do we ensure that potential partners are aware of what we're prepared to do. Lots of questions about, would you consider X kind of structure, or would you consider tax credits, or do you ever provide guarantee? And the answer to all of that is yes, and it depends. So like every, I'm a banker really by training. So like every financial institution, of course, we want to use all of the tools available to us, but we're not going to use all of the tools in every case. So again, as we mature and people get more familiar with the work that we do, really making sure that we can showcase the projects and the deals that we have been involved in, so people can see the scope and breadth, and potential partners and the market can see the scope and breadth of what we're capable of doing.
Well, that's all I have. And thank you to everyone who submitted. There are some additional questions here. Perhaps, Ehren, I'll make sure that you can kind of get a sense of what they are. really engaged, and we hit over 600. So people are very, very keen to learn about what you guys are up to. Thank you to everyone for joining us across Canada. I think there's some international participants as well too. So very much appreciate everybody joining us wherever you are today. And thank you both to Tamara and Ehren for coming to chat with me today. It's always fascinating. You've always got new stuff and interesting stuff on the go. To the point that we talked about earlier, Ehren, if it's okay, you do have an email, contact@cib-bic.ca. That's the general inbox. So for those who had asked questions about how they can get more information, or if you've got specific projects, I'm pitching for you there, Ehren. Send it into that inbox, and someone will get back to you. On the council's note, thank you to everybody for participating. For those of you who are in Toronto or headed to Toronto in the not too distant future, we do have a great networking event that we'll be hosting on the 18th of May. So if you're interested in that, you can go to our website, pppcouncil.ca, for more information there. And with that, I'll say a huge thank you to everyone, and hope you enjoy the rest of your day.
Thanks so much. And thanks everyone for joining. Really appreciate it.
Enjoy. Bye-bye.